Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. It's Monday. It's June 13th. Boy, oh boy, here we go again. The month is almost halfway over. It's about 7:22 in the morning, nice and early. The market's going to open up in about 2 hours and 8 minutes. And as you can see here, the Dow is down 500 points. The Nasdaq is down 350 points. And the S&P is meeting us in between. What's interesting is if you look at the areas, we're right near the low. And again, the RSI is overdone. So it looks like there's a good chance we may rally today. Markets tend to make their lows into Monday, and they tend to peak out on their lows Monday afternoon. So Monday afternoons tend to be really good prices to pick up stocks that sell on Tuesday afternoon. So Monday, you have that turnaround, the end of week turnaround from the previous week. It usually happens on Monday. So I wouldn't be surprised to see if we have a nice little reversal today, since we're gapping down quite a bit. I mean, these gaps will have to be filled. Also, the RSI is already below 30, which is quite significant. And that's an RSI on a 10-day basis. If you look at the RSI on a 5-day basis, you will see that it's grossly overdone, which means stocks are going to be rallying more than likely. Now, if you look at the NASDAQ 100 right here, let me just show you something interesting. It's not reflecting the bottom as much as actually, it's reflecting the bottom just as much or even more. Looks like we're already below that level, or near that level. The low on the previous swing low is 280.21, and right now it's 280. So it already is pre-open a little bit lower. The Dow Jones, or the S&P, sorry, we started with the Dow Jones. The S&P, I meant to say, is also on that level. The one that wasn't was the Russell. The Russell was higher, which again is kind of interesting, since the Russell is down 2.25%, while the SPY is down, let's see here, 2.15%. But notice the SPY is all the way down on the bottom, while the Russell is holding on pretty well, actually. So that'll be very interesting to see if that pattern continues to hold, because that would again say that the small caps are leading ahead. But the stock market is grossly overdone right now. I mean, grossly overdone. Let me show you some momentum levels here. Look at the NASDAQ 100 where we're at again. We just went below the lowest level. We are now February 2020. Look at where we're at. This is COVID right here. This is 2008, the crash of 2008. So we are literally right there. We're literally at these points right now. Let's look at the NASDAQ 200-day. This is the 200-day moving average. Now, this is literally the lowest level we've seen since 2008. So I don't know if this is going to be the ultimate low, but again, just so you could see momentum levels, we are really down. That's the NASDAQ right now. I just showed you. Let's take a look at momentums on the S&P 500. On the S&P 500, similar. This is 500-day moving average. Look, it just doesn't happen all the time. I mean, since let's go to the 20th percentile right here. Since 2007-ish, let's just say 2007, 1, 2, 3, 4, 5, 6, 7 times. So these type of environments are not very normal, and they're not very typical. And these are definitely fearful times. Also, this is the number of stocks above the 200-day moving average. So we are not quite there yet on the 200-day moving average, but as you can see here, we're getting close. We bottomed out here at about 8-10%. We're at 24. I mean, we're not here. We're all the way down here. This is obviously impacting volatility, as you can see here via VIX, which we're short now, unfortunately. And we were almost at break even. But we went back up. I'm hoping that this will come down, and I believe it will. I think this is about as much of an overreaction as we're going to get. Again, the VIX level is all the way near the upper edge of the range right here. That's the highest we've seen in the last 6 months, while the Russell and the NASDAQ are bottoming out, it appears. Again, momentum levels, market internals, volatility, everything is pointing to downside. Let's look at put to call ratio. I haven't looked at put to call ratio in a while. Yeah, it's at 120. There we go. Just as we were dipping into the 80s, again, notice we still haven't been able to break the downside. So everything is once again pointing to a bottom or a shakeout. Now, again, we may go a little bit lower. We may stay in this range, but we are very close to the bottom. Doesn't mean we're not going to stay around these levels or bounce up from here on, which is what we did before quite a bit. But the bottom line is the market is grossly oversold right now. And the most obvious option for us is more upside over the next few days. Now, the bond market is breaking lower, but notice it's just a little bit lower, not too much. So it does look like we're going to go lower. And I mean, we've been congesting for 2 months and I've been waiting for this to happen. And that's one of the factors that's causing stocks to go down. The biggest factor that's causing this is last week's CPI. The CPI hit 8.6%. And that's telling us that inflation is going worse before getting better. Also, the consumer sentiment numbers were awful. In terms of this week, we've got a lot of news. We've got retail sales. That's going to be a major report. Major report. I would say this is probably outside of industrial production, retail sales, and PPI. Those are the three big reports for the week. Now, you obviously have the FOMC announcement, but we already know they're going to raise rates 0.5 basis point. So I'm not really expecting anything major there. I would be more focused on retail sales because that's going to give us a clue of whether retail sales have bottomed out or not. Jobless claims edging a little higher, but again, the number's really low. I don't want to make something when it's not. Philadelphia Manufacturing Index should be reasonable, but industrial production, retail sales, and the PPI, those are going to be the big reports, starting with the PPI tomorrow. With the FOMC meeting beginning, I think the market is going to be a little subdued. We also, as I said, tend to bottom out on the market Monday afternoons over the last 20 years. I wanted to give you that. That's a statistical factor. So you tend to have lows happening Mondays, at least in the S&P 500 and the Dow and the NASDAQ. So I wouldn't be surprised if the market started turning around at some point today. Also, momentum levels and the fact that RSI is grossly overdone is solidifying the same. The market looks like it's going to go higher and not lower today. So you may want to start looking at some stocks because the market's looking pretty good at this point right now for bottom pickers. Again, the bond market is cooling off, but again, if you're looking at each individual sectors, it's the same song and dance. You've got energy, utility, basic materials leading. You've got technology, communication services, and consumer discretionary lagging. Again, on the monthly basis, it is starting to shift a little bit. Consumer staples are all the way in the bottom. That makes zero sense in light of the fact that we may have a global food shortage. But again, this is telling me, let's look at them separately, that we still have to be defensive. I would be bullish energy right now. I would wait for a bottom on these stocks. Utilities looks like it's bottoming out. Healthcare looks like it's bottoming out. Real estate looks like it's bottoming out or making a new low. We'll see. Technology looks like it's definitely bottoming out. Most of these stocks are sinking. As far as the low, you will see actually that communication services did not break the low, whereas real estate did break the low. And consumer discretionary is actually holding up pretty good, while financials are going down, which makes no sense because higher rates are beneficial for financial stocks. So my suggestion right now is to hold tight and wait till we get a little movement. But the fact that consumer staples are starting to come up from here, the fact that energy is not doing so bad, and the fact that utilities look like they have bottomed out is a positive sign, at least for the short term. So I am expecting the market to turn around at some point today. And when it does, again, you want to focus on stocks that have been leading and not lagging. To show you the stocks that have been leading, let me just give you a little taste. All energy. Energy. You've got some non-energies like Bristol Myers, Mosaic, Progressive Insurance, Quanta, CF Industrial. But again, most of these stocks are defensive stocks. I wouldn't go out of the defensive part just yet. I would stay with defensive stocks, at least for the time being, because I think the markets are going to stay defensive for quite some time. And even if we bottom out, it will still take a few days to see that effect, which means you're not going to be late to the party. You might want to wait for the stocks to go a little bit higher and bottom out before buying in. I would wait and see. My suggestion for you is this. Keep your eye on the SPY. Here's a nice little tool for you. Keep your eye on the SPY. And if you start seeing the SPY as the day goes on progressively going higher instead of lower, That's a very, 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 very positive sign. You want to see the morning bottoming out. If it starts breaking below, that's not a good sign. Not a good sign at all. So you want to see the market start breaking higher and not lower. If we break this low, there's a good chance we're going to put more pressure on the stock market. But if volatility starts moving lower and if we start moving higher, that tells me we've bottomed out. Also, the fact is, all these gaps, this is just too much too fast. I mean, look at the RSI. It's just way too much too fast. So there's a good chance we're going to sprint back up to this base, and there's a good chance that this might be the shakeout or a double bottom. We're gonna know more later today, but I don't want you to stress out about this because, again, we're not breaking lower, and momentum levels right now, I mean, look at this. Stocks in the NASDAQ above 200-day moving average, there's just not much more to go. So we in my opinion, we're very, 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 very close to the low. Keep your eye on the put to call ratio, which is at 120 right now. Keep your eye on the VIX for a top out. And VIX is not nearly reacting as much as I thought it would. I think we're going to fill the gap and come down right here. And keep your eye on the bond market. The bond market should start coming up as well. So look for volatility to start coming down, and look for price to start coming up as early as this morning. Want to see higher prices, not lower prices. And by the end of the day, I would like to see us close near the high end of the range instead of the lower end of the range. That's going to be a very, very, very telling sign that the next 2 or 4 days are going to be better and not worse. Now, before I let you go, and again, keep your eye tomorrow on the PPI, and we've got FOMC, so all bets off the table. Big report is going to be retail sales. Consumer discretionary stocks and consumer discretionary spending is down by 50%. So if this report can contradict that, that would be very, very meaningful. Now, I'm about to embark on a new journey, folks, with one specific pattern amongst a few that's been shown to pay up to 11-to-1 odds over the past 2 decades. Oh, you're going to love this. Now, I'm not ready to release this to the world just yet. The project is still in the early stages, and I need more feedback from my trusted students. And I need just a few. That's where you come in. Click on the link below to learn how to become a pattern trader beta tester. Folks, this is it. I've made an algorithm for Japanese candlestick patterns and other patterns. This is better than gold. I mean, this is worth its weight in gold. Every trade, when I give every trade, I show you the backtest result for the last 2 years, give you the profit factor and percentage of profitability. How about that for all past trades in the last couple of years? This is the coolest thing I've done. It's my first time launching something new in 2 years, and I want you guys in on it. Click the link below to learn how you can become a pattern trader beta tester. I need you now. Last 2 trades have been winners, by the way. Strongest sector tomorrow, strongest stock, weakest sector, weakest stock. Follow the link below. Check out Pattern Trader. You don't want to miss out, and I want you to be my beta tester. Folks, I'll see you later, and I'll talk to you guys soon. Follow the link below. Love letters. Hopefully you were there for my Saturday training session. And love letters. I want to see comments, feedback, all the good stuff from you guys. Bye. Have a great, great day today.